This is exactly what I do when I analyze the charts. Selena drops a list of order blocks every week, right? But even if she didn't drop the order blocks, I just go through and I want to look and find every pair that has a weekly order block on it, like this one, right? Here's a weekly order block. Generally speaking, I'm interested in this last candle. I really like nice long candles, right? Because like I just explained a few minutes ago, I know I'm going to get a decent retracement out of a candle that's a larger size. So what I do here is I put my fib on it. I go the same direction that the candle goes from wick to wick. I mark up my 50%, my golden zone. Once I have my golden zone marked up, I'm ready to do a more detailed analysis. But really what I want to know is if price travels from where it is now to the golden zone, what is my gain? Where do I stand to gain, right? And if I put the fib on it, I mean, if I put the tool on it, if it goes, price goes retrace to the golden zone, that's 396 pips. That is a great week. So I'm very much interested in this trade, right? So there are two things that concern me about this trade. So when I look at what's been going on, right, I see a trade that if I measure the move, right, I see a trade that really came from this wick to here and it pulled back. Do you see that? Does everybody see what I see right here?
Yes.
So what concerns me about this is when you get a impulse move, which is an impulse move, then you get a pullback and it pulls back right into your golden zone. I'm thinking that there's a possibility that this trade could end up right here at this negative 27 extension. Right? That's the theory that I kind of will lean on, right? Mm-hmm. So what I want to do is I want to try to go up a time frame to see if I can get more intel, right? And when I look at this time frame, I see where we have lower lows here until we get here. We get a higher low. And now if there's a green candle here, this would be even a higher low. So I'm thinking that price is pushing down and now it will start pushing up. That's kind of what I think, right? And I can get a 2-month view if I want to. In a 2-month view, there's a bullish order block. Price came down and tapped in, and I think price should start going up, right? I'm using everything that I have to try to get the best assessment of this pair. So now that I see what I think I need to see, right? The high level view, I'm really biased that this is just going to buy, right? So that's why on Saturday, whenever I kind of presented this trade idea to you, I presented it like this. Right? I'm biased for the buy. Okay. Now, this is a time frame that I find my setup on. I need to go 2 time frames lower, right, to the 4 hour to find an entry, right? So the first thing that stood out to me was, hey man, this is a bullish order block already. Now, I don't really want to play with this bullish order block because it was last week's bullish order block. But because there's a bullish order block, this trade doesn't necessarily need to give me a new bullish order block just because I want fresh information. So what I said was, because we already have this bullish order block, we can kind of trade this in two different scenarios, right? Either this trade is going to push up, pull back, and let us in the trade, or it's going to pull back, double bottom, and push up and get us in the trade. Either way, we're gonna be able to get an entry based off of the movement of the candle, right? And all I did was waited for the trade to set up. When the market opened. So with the first hour of the market, that the spreads are high. The spread was like 1,000. So you can't enter a trade. It doesn't pay to enter a trade during that time period. So I waited for 1 hour, right? I went down to the 1 hour, and I don't want you going down to the 1 hour, but this is what I did because I already knew what I wanted to see. So that first hour, we get this huge candle to the upside. The second hour, the trade pulled back, and then it pulled back and let me in right here. Right? So what you guys are probably thinking is, well, Todd, there's not a bullish order block right there. I got it. I mean, that's true, but on the 15-minute, it probably was a bullish order block, right? And what I did was, as soon as I saw this retracement, I put my fib on it. I measured this whole candle right here. As soon as this 1 hour candle started pulling back, I put the fib on it. And I wanted to see where this 78.6 line was, right? Because I'm going to take a trade at the 78.6 regardless of what this does, because I already know that this is going up. It already pushed up. It told me, it showed its hand that it's going up. So my entry was right here at this 78.6. Two positions. A little drawdown, straight into profit. Does that make sense?
Yes.
So that's how I got into the trade. Now, I only needed 100 and probably 71 pips in order to make my 10%. I had two positions. As the trade pushed up, it ended up pushing up like 235 pips, which is cool. But I didn't need all 235 pips. I just needed like 170 some pips in order to get my percentage. When I woke up and saw that I was up, and I had made my 10%, I closed my positions out and I called it a night. So I didn't care about how high it went up and none of that. I've been doing this for so long that I'm not impressed. If I don't care if it runs another 300 pips, because if you start getting into a situation where you say, man, well, I'm gonna leave my trade open to get these other pips, you're going to turn into that person that can't be satisfied. But then you made 35% on that trade. I'm trying to get 50, and you'll end up losing because you're trying to be greedy. There's not a time that you're never going to get the beginning of a trade, and you'll probably never get the ending of a trade. You'll get in the middle. Like you can collect a little bit. You'll miss a little bit of the move at the start, and you'll miss a little bit of the move at the finish. If you trade like that, you'll make a lot of money. If you try to get every inch of that trade, you're going to blow a lot of accounts because most people aren't on the level where they can get every penny out of the trade. And I don't mind not being on that level. I've only been doing this a little over 2 years, and the the place where I find my success is the weekly trading the weekly order blocks and getting 150 pips. If I get 150 pips a week, I'm great. I can make it do dances. And if you get there, if you get to where you can see that trade set up for 150 pips, you'll do the same. Get in, get your pip count, get out. A lot of people this week had success with that trade setup, and I know at least 3 people that passed phases in their funded accounts, which is awesome because if you just do that, if they don't trade, they just stop trading and they wait until next week, they can do the same thing next week. One move past phase 2 and they're done, right? It's not that we should expect to pass an account, but the first part of the account is 8%. So as long as this trade setup pays you 8%, you're gonna get that. You're gonna get the 8%. This is a 3% trade the way it's set up now, but I think it was like a 7 point some percent trade the way I had it set up for the weekend. So 2 positions in that 7 point something trade, that's 15%. So of course they pass. So that means next week when they take a trade, as long as it's a 1 to 5 or a 1 to 4, depending on who they're trading with, like sometimes the second phase is just 4%. If you get a 1 to 4 and put one position in, you pass phase 2, and the next week you're doing it for real. To me, if you can think in those concepts, you will be a successful trader. Because we we all make mistakes, right? But if we get ourselves to a point that we can think like it realistically, like whenever I had my job, I got paid once a month. Once a month. At the end of the month, I got paid every month. I had to wait 30 days, sometimes 31 days. Then I get a fat paycheck and I'd be happy. I thought I was living the dream. I make about 10K a month. That's 6 figures. Then they take half of it because I was in California. And, it's one of those things. But then when I discovered trading, I felt like I needed to make that 10K that week. And I was like, I had to get myself to a point where I'm like, look, dude, you don't need 10K. Like, I didn't even need that much money. I went to Vegas all the time, gave my money to them. So it's not that I needed to make the money, but sometimes we get into a situation to where we feel like we want to be the next YouTube sensation when all we really need to do, and if most of us made $300 a week, we would see it. Like that's groceries, that's insurance, a car payment, that's an upgrade for a mortgage or for whatever. And here we have an opportunity to where if you got a $10,000 account, you could probably use $1 per pip lot size, pretty standard, and you could probably never worry about blowing your account. You know what I'm saying? And if it moves 250 pips, you can get 250 pips every week, right? That's $250 every week. And next thing you know, you get your first 30-day, you pass your challenge and you get that payment after 30 days. You made an extra $1,000 that month. Now you can take $300 and buy you a 50K account. And you wash, rinse, and repeat. And Little do we know, 3 months down the road, we're making more money than we've ever made in our life with a 50K account. Because now instead of using that $1 standard pip, now you can use one standard lot. You know what I'm saying? One standard lot, 250 pips. That's $2,500 a week. That's 5%. Once you get accustomed to doing that, then you'll think to yourself, man, all I gotta do is use two positions instead of putting this one position in. And now that's 10%. That's 10% every week. That's $5,000 every single week. And it's not because you're a great trader. It's because all you're doing is putting two positions in instead of one position. And you allow the trade to run. These charts aren't lying to us. Like every week, Selena keeps those stats, not me. I don't have anything to do with those stats. But every week, if I go and check, let me see. If I go and check this list, I go in here to the Swing Traders channel. She'll put whatever happened, right? This was the week that she said that we lost the trades, and I'm like, no, I don't think so, right? So you go back and you calculate what the pip count could be, and then you wake the hell up because you're like, man, that's a lot of pips that I'm missing every week, right? Every week, these order blocks do exactly what we thought they were going to do, right? And when they don't do it, right? When they don't do what they thought we were going to do, we still win because we're on the opposite side of the trade. So if you look at this week right here, didn't do as projected, right? It didn't do as projected, but this was a bullish order block and we sold it, right? We sold it. So even though it didn't do as projected, we made double the pip count because it kept selling. Everybody understand that?
Yes.
So this is why it's important to, if you're going to trade a pair, you want to trade it both ways. You want to sell it to the order block and then buy it once it taps in, or you want to buy it to the order block and sell it once it taps in. Whatever the order block says, you want to do the opposite first, right? Everybody understand that?
Yes, sir. Yes.
Right. I think that
Would you say that again, please, Todd? You said you want to do the opposite first.
yeah. So let's look at it on the chart. This order block is a bearish order block. This is a sell signal, right?
Mm-hmm.
But we bought it first. We bought this.
That's what you're saying.
Yeah. So I made 10% before the move even happened. You know what I'm saying?
Yeah, I see what you're saying.
So that's the importance of doing it like that. So let's just say this buys up all week. Selena's going to put a little thing together and say, hey, man, GN didn't do as expected. And you're going to look at like, man, I got rich. I got rich off GN, right? Even though it didn't do as expected. But in actuality, it did exactly as we expected. In fact, like 3 or 4 people passed their challenge on this up move because we expected it to happen, right?
Right.
So that's the importance of trading these order blocks the same way that I trade the order blocks. Because if you do it like this, even the weeks, you see how you have this bullish order block? Even the weeks you think it's going to go bullish, you're going to sell this. And it sold right past the order block. So Selena was going to get on there and say, hey, man, this order block didn't do as expected. And you're like, dang, man, I made a whole bunch of pips on that thing. It's because you traded the opposite direction. This week is a sell order block. You buy it, right? it never sold. But if you had bought it, you'd have made profit. Now this week we didn't even report it, but it sold down 800 pips. So, we have ample opportunity, and the way we catch the trades, and we talk about the setups, they work. We just have to take the trades and manage the trades on the proper time frame in order to be successful. And hopefully everybody is starting to see that,
I have one quick question about that again. Roy is gone. So when you say the candles, does it matter the size? It does, or that doesn't matter.
So it does, but so this is what I would say about that, Barbara. Right now, I'm the one that's picking all the, like, I'll do the analysis and I'll always suggest something to trade, right?
Right.
I go through and look for the ones with the long, that
Right.
move the long way. So if you're ever doing it and you miss the analysis and you want to do it on your own, go pick your own. But I would still watch the analysis that I do, and you make sure you take, like, if your analysis meshes with mine, then you feel double confident, right? If yours doesn't mesh with mine, maybe you take one of mine and one of yours in trade, or whatever the case may be. The only goal here is to try to put everybody in a position to win, right? I'm not saying you have to trade it like I trade it. You don't have to, but if you don't get the same results, here's the reason why. You understand what I'm saying? Like, some people, I don't want to go against the trend. Hey, that's I respect that.
Right. But I didn't mean to interrupt you, but I think my question is the size of the candle. Does it matter? I know you said I know we're going to get a large candle. I know that, like 100 pips or more. I got that. But say, for instance, you see, you got that, then the next day you get a small little candle like over there to the left. Does it matter those kind of sides of the candles when you?
It doesn't. It doesn't matter.
Okay.
We're trading. We're trying to trade this to this golden zone, right?
Right.
That's what we're trying to do. And it just so happened that I was able to make my weekly goal before it gets to the golden zone, so I'm out. Other people are still dependent on this thing to push up to make their weekly goal. But let's just say it doesn't push all the way to the zone. Let's say it turns around and starts selling. Well, now those people who are still in the trade can flip-flop and they can sell it, right? And it might sell the rest of the week. It might sell down 400 pips starting tomorrow, or starting to. We're able to catch that sell, even though we're buying it right now. We're able to flip-flop and catch the sell to make our percentages that we need for the week. You understand what I'm saying?
Yes. Okay, got it. All right, thank you. Cleared it up. Thank you.
No problem. Any other questions? Bueller. All right, if there are no more questions, I'm gonna get off this phone. Everybody? Hello? Can y'all hear me?
Yes, I definitely.
All righty. Well, I guess we'll hook up tomorrow.
Thank you, Todd. Thank you.
All right.
Thank you. Excellent. Thank you.
Todd, you're still recording.
Huh?
Todd, you're still recording.
I did hit record, huh?